Welcome back to the show. Futures are a little bit down this morning. Another trade war news day. Monday we got a blacklist Huawei. Tuesday, well, we're not going to blacklist them as much. Today, we're going to blacklist them some more. So, another day, another dollar. This is what the markets are just right now just addicted to headlines and not really paying much attention to anything else. Earnings have been okay in the last season. Of course, they did beat estimates. Not surprisingly, though, because we lowered estimates by more than 11%. To make sure the bar was low enough for them to beat. So it's interesting. This is the equivalent, mind you, of what's now happening with SAT scores. Have you heard about this, Danny?
Oh, yeah.
This whole adversity score? Mm-hmm. So we talked about this yesterday, is that you can get an extra 100 points on your SAT score if you have adversity. So if you grew up in a single-parent household, you can get an extra 100 points. So, there's going to be a whole movement now. This has been going on for a while, right? We keep coming up with new ways to really kind of impact marriage, right? So, if you're married, you actually pay higher taxes than if you're single. So, get divorced and, live together and pay your taxes. You can save money. But now you can get divorced so your kid can get 100 extra points on their SAT score to go to college. So,
people are paying tens of thousands of dollars for this, and now they're like, we'll just give them 100 points.
Right? This is the point. And that's my whole point. It's like, we're sending people to jail because they were trying to figure out a way to scam the system. And so SAT just goes, we'll let you scam it for free. Because, again, we talked about this yesterday, is who checks this stuff? Danny, your kids are, half African-American, 3/4, Chinese, and 12% Indian, right? They didn't got that up to 100%. Just,
Hey, work for Elizabeth Warren.
Nobody's, exactly, right? As this yesterday, what is SAT going to require the 29andMe or whatever that is test to come in with it? I mean, come on.
Yeah, there's so many.
Can't imagine. 23andMe?
There's only 23.
There's only 23. Okay, there you go.
Maybe in your case there's 29, but...
Well, yeah, it could be.
It's hypocritical in so many ways. I mean, I understand trying to give everybody a fair shot, but at the same token, if we want everybody wants equality, there's no equality essentially with this, right?
Right. Well, and this is kind of the point is, we have now gotten into a point in society to where we're trying to figure out ways to make it easier on everybody to try to get what they want, because none of it's my responsibility. I don't have to put in the effort for it. I don't need to strive to achieve something. If I can't be in the top 1% of the population, it should be given to me, because that's just the way that's equal, right?
Well, it's like
I didn't have to earn it. I just need to be given it.
But it's like the same thing as the Ohio high school who says, "Hey, we're not going to have a salutatorian, a valedictorian.
Mm-hmm.
It's too stressful.
Yeah, it's too stressful. We don't want to hurt people's feelings." And I just gotta wonder if at some point down the road people don't look back, in history, and go, "What the hell was wrong with those people?"
Well, this is the exact date that things really fell off the rail here.
But so it's interesting. A guy wrote for townhall.com. He says the latest tactic for the elite to shaft normal Americans is the obnoxious adversity score that that academians who now run the SATs plan to introduce as a way to give a fig leaf of objectivity and fairness to the kids in favor of other kids that actually work for their scores. He goes, what about an adversity? This is just the bottom line of this. What about an adversity score for the hardworking kids that actually go to college and pay their way through school?
Amen.
Right?
Yeah.
Like me.
Yeah.
Right?
Yeah.
Yeah, and your kids. I graduated college, no student loans. I had to work 3 jobs to pay my way through school.
So my one stipulation, my dad helped me a lot with college, but I was also required to work. And if I did not work, if I did not make grades, I would not, I'm on my own, right? And I had to pay for a lot of things on my own. But my junior year, I remember looking back, I worked 3 jobs. The first one was I was doing apartment maintenance at an apartment complex, picking up dog poop first thing in the morning. So what do you think I did, man? I got there at 5 a.m. when everybody's still sleeping, so my buddies didn't see me out there. And, man, I'm picking up dog poop. It's the little stuff. You look back, you're like, man, I can't believe I did that.
Right. Can we also go back to the fact that when you're in college, you may take 12, maybe 14 hours of classes a week? There's plenty of time in there to work, and still be able to study. And guess what? It's like real life. You go to a job all day, you work, then you go home and take care of stuff at home. then you do it all over again. It's just, people go, oh my gosh, I can't work and study. It's just terrible. It's like,
It's
come
the
on, man.
course that's not on the syllabus.
know,
It's
right?
called Life 101.
I think, we took history of rock and roll.
But that was a good class.
That was the great class, actually.
So anyway, all right. But anyway, all right. Moving on here.
I love the homework of that class.
Yeah, right.
Oh, yeah. It was great.
I need you to listen. I need you to listen to Grateful Dead this weekend and come back and give me a.
Well, the funny thing is when I went to school, it was like actually in the old church, like in the middle of campus. Adam would recall, I'm sure, and it was a pretty cool. It was like they had pews, but then everybody sat on the floor, so you felt like you're kind of like a hippie. This is way back. We're looking almost 20 years, but yeah. So
I know. I like his way back. Mine was like 40 years ago.
Hey, you're aging yourself here, buddy.
I got like 2 years left before I jump out of that airplane. So,
I went back and took some classes at U of H, and the first day I walk in, and they said, "So you're the teacher?"
yeah.
No.
Wait, can I get paid?
Yeah. All right. Do we want give on the website, realinvestmentadvice.com. Believe it or not, we actually have a class coming up next Wednesday with Danny Ratliff talking about Social Security. This whole conversation got started about Social Security and the cost of living. It's interesting because the Federal Reserve is going to release their minutes today. We actually had an interview yesterday with Danielle DiMartino Booth talking specifically about the Fed, what they're looking for, their mandates, and it's very kind of up to the minute about what will be coming out today in terms of the Fed minutes. So if before today's minutes, I suggest you go out and go to our website, realinvestmentadvice.com, click on the YouTube tab and watch the latest video interview with Danielle DiMartino Booth. And then the Fed minutes will be released this afternoon, and we'll get to see what they were talking about in April. And at their last meeting, they released their minutes a month after their actual meeting. And it's interesting because there's always a dichotomy between what they actually say in their press announcement and what comes out in the meetings. So these meeting minutes are going to be very closely scrutinized for a couple of things in particular. One, what is the Fed's real view on inflationary pressures and the current position in terms of Fed funds rate? The White House has been after the Fed to lower interest rates to try to help stimulate the economy. We need to and honestly, this is exactly what Donald Trump said, we need to be like China. In other words, lowering interest rates, providing a lot of stimulus to the economy so it can help prop up the economy currently. Now, remember, you're in 10th year of an economic expansion. We just grew at 3.2% the first quarter, and we want to actually apply more liquidity, more emergency measures to the markets. That's something that the Federal Reserve is not going to be quick to do. They're not going to be in a position to lower rates anytime soon. They are not going to be in a position to use quantitative easing anytime soon. And the reason is they need to reserve what little bit of ammunition they have for an actual recession. If they use it now, basically you're kind of wasting the bullet that you've got in the gun.
Well, and if they start using it now, wouldn't that be a big warning sign that there are other things that they're seeing out on the horizon or that we're seeing right now? Because typically, like you mentioned, that we find out we're already in a recession, way after we're in a recession.
About 9 months after.
So if they come out and say, hey, guys, we're going to go ahead and lower rates, wouldn't that indicate or show the market that maybe it could cause some more turbulence and not actually have that positive impact like it has previously?
Right. Well, and typically, if you take a look back at Fed history, they tend to lower rates before the actual recession starts. We don't know the recession has started because of the delay in the information, right? And this is the big problem when you take a look at 3.2% growth in the first quarter, right? In a year from now or in 2 years from now, we'll get those numbers revised, and it may only be 1.5%, right? And there are big, deep negative revisions that happen to employment data, economic data, et cetera, because it's all very lagging and very much a guesswork. So this is why when you're taking a look at economic data or employment data today, what's more important than the number is the trend of the data. Is the trend of the data getting stronger or weaker? That gives you a much better indication about where we are in the cycle. And because of those numbers and what those trends are, it's unlikely at this point that the Fed is going to be using any of that ammunition. But again, we'll get a look at what they're thinking today. There's a big bet by the markets that the Fed will lower rates this year. That's also probably an improbability at this point. But again, we'll see what they say this afternoon, and we'll talk about it more tomorrow. Be right back after the break. RealInvestmentAdvice.com.
It's understood that Hollywood sells Californication.
Follow Lance Roberts on Facebook or go to lancerobertshow.com.